Thanks, Tim, and hello, everybody. It's good to be back. If you go one slide back up, please. It's good to be back in not just ShareCafe, but also back in the office, Tim. And for those who don't know PayGroup, next slide, please. PayGroup is all about presenting a HR, payroll, HCM solution to the corporate companies and the workforce management companies of the world. Now, who do we service this to and what do we do? Have you ever had a job as a full-time employee or a contractor? And has your pay always been right? Have you read about these underpayments in the market? And have you also ever had, paper-based interaction with your HR teams to get your leave and expense claims? So what PayGroup does is it takes all those compliance headaches, it takes the paperwork into digitization, and it presents a software as a service solution, giving corporates and workforce management companies single view of their workforce. Who do we do it with? Some examples on the page here. We've got financial services organizations like Westpac, Temenos, you've got Arab Bank Group, you've got in the middle professional services like Appen. Then we have companies like Michael Page, People Bank of Chandler, and then we move all around to the industrial sector, and we're really industry agnostic. And one of the recent wins we had, which I'll touch on a bit later, is Volvo Group right at the bottom right, which not only took our core solution, but based on an acquisition we made recently, we were able to upsell that into our base. So think about corporates who employ full-time and part-time employees, and think about workforce management companies who employ contractors and then subcontract them to the end client. So we cover that full spectrum. Next slide, please. What is the investable thematic of PayGroup before we get into the detail? Our growth factor. We have grown since IPO, and our direct measure of growth is revenue, and our direct economics of calculating revenue is the number of transactions that we do every year. And the number of transactions refer to how many pay slips have we distributed every month or every year, and how many transactions of payments have we done, and how many active users we have on our platform. And each of those has a unit economic driving to revenue. So since IPO, which was in 29th of May, 2 years ago, we've gone from 430,000 transactions to 5.4 million, exponential growth. We've had record sales in the half for this year for us, and we are a 31 March year-end company. So for the 6 months, we've had record sales where we've matched the total contract value sold in 6 months to the entire contract value sold in our last financial year. So it's been a great tailwind that we're riding at the moment with digitization. We have minimum 3-year client contracts, which are automated renewals. So we have long tail customers, and what I presented earlier, some of those customers have been with us for over 10 years. And as equally important, we have a very strong continued recurring revenue stream, committed recurring revenue stream, which is greater than 95%. And that leads to a very fast growing repetitive revenue business with greater than 95% client retention. Next slide, please. So let's talk about growth and how we fit into what the experts like Gartner predict. Gartner predicted that in 2020 to 2020, the CAGR of growth in corporate workforce payroll solutions, so ignoring workforce management companies for a second, was 3.1% growth, and they're projecting 14.5% over the next 3-4 years because of greater adoption and digitization. What does PayGroup do in that period? PayGroup grew in the corporate workforce 13.5%. So we're advanced of the growth that Gartner predicts in the corporate workforce sector. Next slide, please. Just a bit of a scorecard on our performance. We've, in the first half of this FY21 year, so that's 1 April to 30 September, we've hit our maiden statutory NPAT, and we have cash in the bank to invest in growth. So what are the key factors that we look for in telling our investors about how the company is performing? Well, like I mentioned earlier, our new sales, our total contract value, we signed in FY19 a total of $4.9 million, FY20, $5.5 million, and in just first half of this year, we've matched the whole of last year. Great leading indicator. And that leads to the increase in our annual pay slips and transactions, which I referred to earlier. We've gone from beyond 5 million now, and we're up to 5.2 and continuing to grow because of our strong sales coming into our recurring revenue stream. We've grown because of organic growth, but we've also grown because of acquisitions, and the acquisitions have been very strategic in nature, adding more modules to our offering, as well as more geographies, as well as a greater sales force. So everything links to offering more to our client base, getting a greater share of wallet for our clients, and adding more and more to our service layer. Our clients have increased because of organic growth and acquisitions, but importantly, our internal employees have only grown because of acquisitions. And that's because we've been able to find efficiencies in the way we do things. And that way, we do more work with the same base of operating people over time. Our operating cash position has improved tremendously, both from an organic and an acquisition strategy. And our global partner program, which I'll touch on earlier, really does add to our organic growth as well. Next slide, please. So what are we today? Today, we are a full hire to retire SaaS platform for HR. We can onboard you, do everything for you in your HR and HCM world, and then retire you to your superannuation and pension fund. All 27 modules on internal development and acquisitions, and we own them all. We've gone from a 18-country solution at IPO to a 41-country solution today. That's a huge expansion, and that allows us to service our clients in greater geographies. And we have a very highly experienced board, and we've newly appointed Mr. Shane Guild to add to our equity capital market experience. Next slide, please. So don't get confused by the great wheel we present here. It's quite simple. The 27 modules are there. The bullet is PayGroup. We do payroll. We do your payment. We do your strategic HCM like onboarding, talent management, recruitment. We have our unit economics driving more revenue. And more importantly, because we have 5.4 million transactions every year, we can use that great asset of client employees to monetize more and more. And the monetization are things like accessing wages early, it's financial well-being products and services, and it's creating that ecosystem to allow our customers and their employees to take advantage of more and more services and products. And our 4 pillars of growth, mentioned earlier, organic growth through direct sales, acquisitions, and we continue to acquire, a global partner program, which links directly to organic growth. And we do all this efficiently. And that's where I mentioned earlier, we haven't really had a need to organically grow our operational base. Next slide, please. So what is our outlook? Next slide, please. Our outlook has strong tailwinds from our new sales. And how do we get new sales? We have 16 salespeople around 7 countries selling our services and solutions. We have a global partner program, and the global partner program really looks at how we partner with channel partners where we don't have a direct sales force. And these partners are all multi-million and multi-billion dollar companies in the US and in Europe, selling the services that they sell, which is exactly what PayGroup does, and letting us have those to implement and operate, because we have a 41 country solution in Asia Pacific and Middle East, whereas these guys don't have that. So they have a great sales force. They sell it using our pricing rate card, no commission, no discounts. We get the work and we implement and operate. The other kind of partners we have are monetization partners. Flair is an example. And what that really does is we onboard a lot of our contractor employees onto our platform. When a contractor employee is registering their onboarding, they come to a screen which says, would you like to choose a superannuation product for your contract? If they choose that, PayGroup makes a revenue commission. And that is all about taking our greatest assets, being our client employees, and monetizing them for greater revenue and greater share of wallet. The Global Partner Program, from a standing start of zero revenue 18 months ago, now represents 7% of group revenue, and it's going to continue to grow as part of our organic growth. We've had the strongest sales pipeline. It's 5 times of what it was 16 months ago. Unbelievable growth. We have also got a strategy to enhance acquisition growth. And we continue to look at targets, and targets approach us because we are one of the very few listed companies in this space in Asia Pacific. And one of our recent acquisitions, which we signed a binding agreement, should get its approval in our EGM next Friday, which is Payroll HQ, which brings on more and more payslips and transactions into our business. We also have a very key strategic study underway with Pricewaterhouse in Asia to understand more and more targets around that region. We know a lot of people, but we don't know everybody. So we're conducting a study with PwC, which is 80% cash backed by the Singapore government. And how do we forecast our FY21? Well, contribution from organic growth, contribution from acquisition, full focus on margin, which shows why our operating cash flow has gone positive in the last 4 quarters, and we've hit our maiden stat profit. And we're on track to be very cost efficient, but not cost cutting. We're very, very invested in our growth. Thanks, Tim. The rest of the slides that I've got there are more around appendices to introduce our board. So I'm happy to go maybe 2 slides forward, please, and just talk a little bit about that. Very industry board and very compliance driven board. Ian Basser, industry expert. Rand Chandler McLeod, Frank Neron Bancel, industry expert, was at the senior exec committee of ADP. It's a Goliath of the world. Mark Samlal, our managing director, over 25, 30 years experience in the industry. David Fagan is an ex-lawyer at Clayton Utz, looks after our compliance. And Shane Gill rounds out our board with equity capital markets. Thanks, Tim. I'll take some questions now.
Thanks, Sachin. There's a question about what ultimately are the savings to a company when they subscribe for your services. Have you got any data or evidence of that?
Oh, look, the saving is if you consider having 5 subsidiaries around Asia Pacific, you have a core team sitting in Headquartered, and you have 100 people in 5 countries. Rather than you employing a payroll expert in each country, which costs money, you have Headquartered look at managing it for the group and outsourcing that whole payroll strategic HCM to a company like Pay Asia or PayGroup, which then gives it to you by unit economics versus a fixed cost in each country. So it actually saves quite a lot on resource cost, especially for regional deals. And with traditional deal in regional deals, Tim, we don't really have too many single country offering because of that cost saving economics.
Now, and as a subscription service, are these companies paying per transaction or per employee? How does that work?
In each division, and we have services, SaaS and payments division, each one pays by a payslip or a transaction or a monthly user. However, each division has a floor price. So even if we help, Westpac Bank in a country they're opening up with 7 employees, it's not 7 times $20. It actually has a floor price, which protects our margins too.
And M&A has been a strong strategy. Is the strategy there to acquire clients, revenue, or technology?
Well, every acquisition has to be accretive in both margins, earnings, as well as, cash. For us, revenue growth is important. So the recent one, Payroll HQ, we actually bought a great sales force, which is a fantastic sales engine. And how that supplements within PayGroup is we can deliver the work using our Australian and Asian infrastructure, but have great sales pumping in. The other advantage and acquisition we've done is to complement our modular suite. And Talent Oz, which we did in July, added 11 strategic modules to our core. And we've already seen upsells in that, where Volvo Group is a great example. And we announced that on the ASX recently.
And so do you kind of rebrand those acquisitions as part of PayGroup? Is there a technology build to incorporate those into your existing platforms?
Absolutely. So when we do the acquisitions, especially on technology, we already know what the integration points are over a period of time for us, and we prioritize that as part of our roadmap. The branding aspect, Tim, it's an interesting question. You know, when you have a single country solution provider like Payroll HQ, which is known in the market, there is no point coming in there and taking over the brand immediately. It's over time, you'll see us look at our branding strategy globally on how we market our services, solutions, and our payments projects.
Great, thank you. And just one last question. What are the kind of leading indicators in terms of the outlook for 2021?
Sure, Tim. So it's really strong sales, strongest sales ever, and we're continuing to sell. Putting those sales into our recurring revenue stream is very important for us. So one of our advantages is that we implement faster than our competitors. And for us, it's all about revenue growth and growing our payslips and transactions.